In today's video, we're going to discuss why I'm avoiding the new YMAX ETF, the long anticipated all-in-one Yieldmax Dividend ETF. I have a few reasons for why I'm avoiding this fund. So we earn over $150,000 per year in dividends at this channel, and we're going for $200K in order to live the FIRE lifestyle. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number for life, but only until the 1,000 member mark is reached in Discord. After that, I will charge separately for my phone number. Our performance shows that we're beating the market still for the year. We're up 1.58% and the S&P is up 1.47%. So we're in line with the indexes, and this is because we take an indexed approach at this channel to mitigate risk. And we also use some margin to get ahead, as all greats use debt to get ahead. As you know, if you're a viewer of this channel or if you're a newcomer to this channel, for every $1 you put in your account, you get $4 of purchasing power in a brokerage account. Not in a Roth, not in an IRA, but in a brokerage account. So you need to use this to your advantage. Okay, here's my margin debt down here. It's around $130,000, as you can see in the red here. And my dividends of over $180,000 per year will pay this back in less than 1 year. And I have about $50,000 in bills. So we'll be at about even by the end of the year. I'll be at zero debt. My account will be plus $130,000 because I have to pay $50,000 in bills. And then I'll be left with all of these dividend paying assets to myself, paying monthly cash flow for life, which qualify to banks for loans. This is how you live the FIRE lifestyle and truly get ahead. I also negotiated my rates down for my margin debt. Okay, so my margin debt's around 6.5% interest, and many of my clients have done the same. That's one advantage of having my phone number. So my leverage will be gone in a year from the dividends, and this debt doesn't show up on a credit check, and I can click sell at any time and it's gone. My first reason for avoiding YMAX is it's still 50%, even with the diversification. So if you go to a maintenance tab of YMAX, okay, let's just go to Tesla first. Okay, so Tesla, we go into the maintenance here and we see snapshot 50%, view margin maintenance requirement 50%. So this is for Tesla, which is a more risky stock. Okay, maintenance also tells you the amount of risk in a stock. If you need help understanding maintenance, that's in my volume 3 margin e-guide. But you would think a fund of funds like YMAX would have lower maintenance because it's less risk. But if we go to the maintenance tab of YMAX, you'll see that it is indeed 50% maintenance. So it was up nicely today, and that's good. But again, 50% maintenance, this means it sucks up half of my equity. Okay, to live the FIRE lifestyle, you have to have low maintenance names because that keeps your available for withdrawal high. Okay, my account value is around $491, but my available withdrawal is $208. This is how I live out of my account. This is how I withdraw and live freely out of my brokerage account. I can swipe my E-Trade credit card and go wherever I want in this world. I can buy cars, clothes, shoes, whatever I want with my margin debt. How did Elon Musk buy Twitter? With his margin debt. So you need low maintenance to keep that available withdrawal high because you need to be able to stand margin calls, which when this number hits zero, you're in a margin call, but you also, again, want to withdraw freely from your account. Even if you're not using margin debt, you want low maintenance names because you want to be able to live out of your brokerage account and live the FIRE lifestyle, which is financially independent, retire early. In order to live away from a 9 to 5, you have to have dividends, and because those qualify as pay stubs to banks for loans. And then you have to have low maintenance so that you can withdraw freely out of your account. And you have to keep that available withdrawal high. Okay. So again, even when you're not using margin, you need to watch your maintenance to manage risk and preserve your equity. So my second issue with Yieldmax is that it's an equal weighted fund, and I think I can outperform this. Okay, if we go to the Yieldmax prospectus here, you'll see that all the ETFs in this fund are about 5%. See the weighting here? 5%, 5 all the way across the board, 5%. Okay, and so to me, I think I can outperform this because they have things like mRNY in here, which is in the index, mRNA. It's a small part of the S&P, but it's 5%, and that's a really volatile name. Okay, you also have things that are not indexed in here, like AIYY. Okay, I don't want to just be buying more AIYY or mRNY just to stay in line with the mandates here, which is looks like an equal weight mandate. Okay, I think I can get more yield as well because when you average all these names out, I came out with about 30 to 40% yield. What do you guys think? Leave comments in the section below. So as I was saying, I think I can outperform because, again, I don't want to have to buy more mRNY to keep it at 5%. I'd rather go with the weightings of the indexes. That's why I have about 10K in, let's say, an Appley, okay, because it's 10% of the NASDAQ and a large part of the index. If we go to the weightings of the S&P, you'll see that Apple is about 7%, Microsoft 6%. And when you go down to Tesla, it's 1.7. So there must be a reason why the managers of the S&P keep it at non-equal weight. And after all, the S&P is one of the best indexes in the world. So I choose to keep my weightings like the S&P for better performance, for risk management, and it helps me get more income. Okay, so I'd rather go with the indexes. You know, I always go with the indexes at this channel, and Cornerstone is my way to really get exposure to the indexes. That's why I have about 400 grand in Cornerstone, and it is a 4-star fund, as you can see here on Morningstar. If you see my past videos from 2023, you'll see that Cornerstone actually beats the S&P over the last 10 years. Okay, so this is how I'm staying indexed, okay? But you have to play Cornerstone properly. This is a closed-end fund. You have to time it around its rights offerings like many closed-end funds. If you need help doing that, that's in my Volume 4 e-guide. I really like to use rights offerings to my advantage and level up my account, because if you play rights offerings properly, you can take all your gains from the year, you can sell before the rights offering, and then buy back after the big drop and really add a lot more shares to your account and avoid the pain that way. So you pocket all your premiums received for the year and the dividends received for the year. Okay, that's why I like rights offerings, and I like to use them to my advantage. And my Discord chat room alerts you of that rights offering. Again, we're approaching 1,000 members in the Discord chat room who can help you with your specific needs in your brokerage account, because not every brokerage is the same. Not every brokerage has the same maintenance levels for Yieldmax funds. You can go to other brokers and get lower maintenance there, but then you won't get the special drip for Cornerstone, and that's the big advantage of Cornerstone. Not only does it have a 21% dividend that also gives you capital gains because it averages 20 to 30% premiums per year, but it also drips its 21% dividend down at the NAV every month for free money. So you can't find another fund out there that does this, that's linked to the S&P. That's why I'm so heavily invested in Cornerstone. But again, you have to play that right, and my Volume 4 e-guide instructs you on how to do that. We also have other channels like a Yieldmax channel, which I think is the best Yieldmax channel around, better than any Discord in my opinion, because we share other YouTube videos that discuss Yieldmax funds in our Discord chat room, okay? You can also follow my portfolio in the Discord chat when I'm not making videos on YouTube. I also use Defiance, FEPI, and iSpy for my index exposure, but they give me my pure dividends more so and don't really give me the capital gains like Cornerstone can. Cornerstone is also the lowest maintenance of those funds. These funds, Defiance funds, QQQY, JEPY, they're 50% maintenance, but Cornerstone is only 30% maintenance. Okay, and by the way, Cornerstone was down today fractionally. Okay, so that's what led to our underperformance. But it was up before this when the market was down, and that's how we're getting our outperformance is Cornerstone. Also, Bitcoin was down huge. If we go down here, you'll see ARKZ was down 6%, ARK-A was down 3.5%, and Litecoin was down 4%, but I keep my positions small in these, okay? Litecoin, $1,500. This is why you need to have prudent position size management, and you need to link your investments to the indexes. Always stay indexed to avoid performance issues. Okay, lastly, watch out for spam. I've been getting a lot of spam issues in the Discord chat room and in the YouTube comment section. I do not sell anything except my e-guides, okay, and my time over the phone, which right now, again, my phone number is free, but after we reach 1,000 members in Discord, I will have to charge separately for my phone number. Okay, so if you want to live financially independent out of your brokerage account, email me for my e-guides at aikentod48@gmail.com. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.